Beyond the headlines. And now to our interview with the second guest of the day. I'm joined by the Chief Executive Officer of the Center for the Promotion of Private Enterprise, Muda Yusuf, for discussion on Naira's struggle against the dollar. Thank you so much for joining us, sir.
Thank you very much, Jumoke. My pleasure to be with you.
Yes, same here. So we're going to start this conversation this way. When the new administration unified the forex window and floated the Naira, we thought the free fall of the Naira will reduce. Why does the value of the Naira continue to fall?
Well, quite a number of factors have been responsible for the rapid depreciation in the exchange rate. The first is the challenge of speculative activities. There are quite a number of individuals and corporate entities that are making demands for dollar in the economy. Not all of them are engaged in real economic activities. There are quite a sizable number that are making demands for dollars, not because they want to import anything, not because they have any business they are doing, but because of speculative activities. For some, that is an arena for business. They speculate on the currency in the belief that once this currency depreciates, they'll be able to sell and make some margin. Some also speculate on the currency just to get the currency and have it as a store of value. And there are also instances, of course, of people who have illicit funds. You know the level of corruption in the economy. And some of these illicit funds can be substantial. And when you have a market that's a bit liberal, where all manner of people can come in and make demands, such illicit funds also find their ways into the market. And for somebody who did not work for the money, has a lot of slush funds, they could buy the dollar at any rate. So these are some of the factors. And of course, we have the backlog of unmet foreign exchange demand. Under the previous dispensation, we had a huge backlog of forex demand that were not met. An example is the outstanding payment to the airlines, which is about $800 million, which is the highest, according to IATA, is the highest anywhere in the world. So all of these pressures coming together at the same time, exerted an enormous pressure on the foreign exchange market. And of course, in the midst of all of this, the government also had to, service the Euro bond. That is $500 million. At a time when there was also limited capacity by the central bank to intervene in the foreign exchange market. So basically, these are the factors. And of course, again, just to add, is the fact that because we have deregulated the downstream sector, and because the private players in the petroleum downstream now have the liberty to import petroleum products. By the time you also put that demand on the market, you can imagine the enormity of the pressure. So there's a huge pressure of demand on the foreign exchange market, and the capacity to meet that demand is quite weak. So that is what has led to the weakening of confidence and to the very intense speculative activities on the currency.
So what's also responsible for the arbitrage gap, which now stands at about 206 Naira to $1, if not higher?
Well, the challenge is that, first, when there is a breakdown or a deterioration in the level of confidence, there's always a rush on the currency, almost like a run on the currency. And because not all the demands can be met at the official window, which is the I&E window, there's a lot of spillover to the parallel market. And the more you have this spillover, the higher the pressure on the parallel market, and the higher the depreciation in the currency in the parallel market. So increasingly, as confidence deteriorates, more and more people are going to the parallel market because the demand cannot be met at the official window. So basically, it's a question of the capacity to meet demand and the capacity to sustain confidence. Because not all the people who are demanding the currency need the currency immediately. Some need it to store, some need it to, launder money and all of that. So all those factors are there. So that is what has led to the widening gap between the official window and the parallel market window. But I must say that this policy direction is the way to go. Of course, we needed to define the limit, which is what the central bank has done. We cannot afford to leave the currency entirely to market forces or to freely float the currency. From time to time, the Apex Bank has a responsibility to intervene to stabilize. And if you look at the rates over the last 1 month or so, the rate in the official window has been fairly stable. The current concern now is the widening gap between the official window and the parallel market window, which of course could create distortions and create arbitrage opportunities. And I'm aware, going by what the acting central bank governor said yesterday, that something is being done to address this confidence crisis in the foreign exchange market.
But can we really stop round tripping?
Well, round tripping, first, there has to be a lot more vigilance in the market. Because all over the world, even in the most advanced economies, you are not allowed to just demand for foreign exchange just anyhow. There is need for closer monitoring, and there is need for, much stronger institutions to ensure better credibility in the entire ecosystem of our foreign exchange management. That is important because you need to control some of these things. If people are making demands that are suspicious, you should call them out. They should be called to question. And there has to be consequences. I'm aware that under the previous, the suspended CBN governor, there are quite a number of accounts that were suspended, but recently some of those accounts were unblocked. I don't have the details, but it is possible that some of those accounts were involved in all these shady deals in the foreign exchange market. So there is need for a lot more vigilance, even as we pursue this market-led strategy of managing the currency. There is need for vigilance to ensure that those who are demanding the currency, whether in the parallel market, the bureau de change, or in the official window, are genuinely demanding it for concrete economic activities, not for speculative activities. So that is important. Then, of course, the way to also reduce this is to ensure that we are able to build confidence and we're able to meet demand in the official window. If that is happening, the need for demand to spill over to the parallel market will be reduced. And if there's a reduction in pressure in the parallel market, the gap will continue to narrow. I mean, the first 2 or 3 weeks of the introduction of this new foreign exchange management, we didn't see any serious gap. In fact, there was a time when the official rate was even higher than the parallel market rate. But suddenly, we saw this surge in demand on both the parallel market and the official window, and at that point, we began to see this kind of swing or deterioration in the exchange rate. So some of these things also need to be properly investigated to ensure that all these extraneous variables that are distorting the assumptions and all the policy arrangements, all those things are put in check. That is very important.
Dr. Yusuf, the CBN has vowed to crack down on currency speculators. How will you advise the Apex Bank to go about this?
Well, it's to use intelligence, to use data, and to monitor the flow of funds within the system, to monitor those who are demanding for this currency. It has to be effectively monitored. And once there's evidence that these things are driven by speculative activities, or there's evidence that some of these funds that are being used are illicit funds that people cannot account for, there has to be consequences. I'm sure that is what led to the closure of some accounts, which, well, the CBN now has reversed some of those things, but they need to go back and check properly so that you don't unleash all these illicit funds and these sharp practices on the market. So that is what I think the CBN can do, in addition to ensuring that we sustain confidence, because at the heart of all of these things is confidence. If you're able to instill confidence that if you need the currency, you get it, in the official window, you don't have to bribe anybody or something. If you have that, then less people will be going to the parallel market and the gap will narrow. And I'm happy that recently, just this evening, I had a news that the NNPC has been able to strike a deal with Afrexim Bank of $3 billion to be able to support, to stabilize the market. That is good news as far as I'm concerned, because it's not all the time that you go borrowing to IMF and all of that, or to the Eurobond market. If you have credible companies, you have strategic assets that you can leverage on to raise funds at a more concessionary rate, that is also a solution. So with that, we are likely to see a reduction in some of these speculative activities and a restoration of some level of confidence in the market.
All right. So reacting to a statement by IMF saying the economic policies in the country are too weak to boost the value of the Naira, what's the way out of these?
No, I don't quite agree with the IMF on that. And we also need to be careful how we just allow the templates of IMF and World Bank to dictate the path or the trajectory of policy. We need to be extremely careful. Some of their policies are good, but some don't actually fit into our own context. So we need to be very discerning to know what will work here and what will not work. And we need to know how far some of their policies can go. Now, the IMF was talking about, excess liquidity, need to further tighten monetary policy, and so on and so forth. As we speak now, monetary policy rate is 18.75. How many countries have that level of interest rates in their economies? I know the implication of high interest rates for economic growth and for investment. Our CRR, which is cash reserve ratio, is 32.5. And what that means is that for every 100 million Naira worth of deposit that goes into the banking system, 32.5 million is sterilized with the central bank. So you can only do business with the balance. The Nigerian CRR is one of the highest in the world. So how much more tightening do you want to do? I mean, the industrialists are crying, all the people who borrowed money from the banks are crying about high interest rates. The financial system is not able to support the growth sectors of the economy because interest rates are very high. So there's a limit to which we can continue to adopt the template of some of these Western institutions. So I think what is important as far as this Forex is concerned.
All right, so Dr. Yusuf, prices of goods have...
I've been talking about the challenges of all been doing a lot to tackle in terms of security and so on. No, go ahead.
All right. Prices of goods have increased recently. I would like to know, what's the impact of, what impact is the exchange rate having on this?
No, the impact is very profound. The economy is highly sensitive to developments in the foreign exchange market. In fact, there is a strong correlation between exchange rate movements and inflation. because the economy is also heavily dependent on a lot of imports, unfortunately, because it doesn't have to be so, but that is the reality. If you look at our manufacturing sector, a lot of their raw materials are imported, a lot of the equipment are imported. If you look at even some of our services sector, most of the equipment they use are also imported. And unfortunately for us, petroleum products which we are supposed to be refining locally are also being imported. And it accounts for almost 30% of our import bill. And generally for any energy, import energy dependent economy, for any economy that is importing energy products at this time, it's a lot of pressure for that economy. Unfortunately, we fall into that category. Because ideally, we should be benefiting a lot more from the high oil prices globally. But unfortunately, we have become a victim of high oil price because we have not governed our oil and gas sector properly. So a lot of pressure of demand is also coming from the oil and gas sector. So when you feed all of this into the price, because all of these people are going for foreign exchange. And the more you have a depreciation, the more it is costly for them to bring these things in, and these things feed through the general price level. So that is the connection or the nexus between the exchange rate and inflation.
All right. So because most of our approaches so far have been short-term, what long-term strategies will you suggest as the way out?
Well, the way out is what the government is doing. We need to stabilize the macroeconomic environment. And what I mean by macroeconomic environment is to ensure that we have stability in our exchange rate environment, which is part of the initiative that is on the table at the moment. We need to stabilize our inflation environment to ensure that we don't have very high inflation. We need to ensure that we manage our fiscal environment properly so that we are not running very high deficits. And some of the reforms that have taken place are also meant to address some of these macroeconomic conditions. Because you need a stable macroeconomic conditions to inspire the confidence of investors, whether they are local or whether they are foreign, whether they are portfolio investors or they are foreign direct investors. You need that stable macroeconomic environment. And the government is working towards that, to stabilize the exchange rate and to also to ensure that there's reduction in inflation. The second very important point is to address investment climate issues. Because if you talk to entrepreneurs, apart from these macroeconomic issues, there are a whole lot of challenges they face in the investment environment. Challenges of infrastructure, of power, of cost of diesel, of high import duty, of the customs, of the ports, of all manner of non-state actors harassing businesses all over the place, and of insecurity. These are very serious investment climate issues that government needs to fix. And I'm hoping that they are doing something to fix a whole lot of these issues. So by the time you deal with the macroeconomic issues and we deal with the investment climate issues, we have investment growth. Because progress of an economy depends on how much we are able to attract investments. Not just foreign investment, even domestic investment. But it is from investment that you can create employment.
Dr. Yusuf, are you there? All right, I've been speaking.
Those are some of, to ensure that we have long-term stability.
All right, I've been speaking with the Chief Executive Officer of the Center for the Promotion of Private Enterprise, Dr. Muda Yusuf. Dr. Yusuf, are you there?
Yes, I'm here.
All right. So let's quickly talk about the reliance of Nigeria on crude oil sales, which is another factor. How much of an impact is this having on the system presently? Dr. Yusuf, did you get my question?
Yes, I'm with you. Can you come again?
All right. I'm talking about the reliance of Nigeria on crude oil sales, which is another factor. So I'm asking, how much of an impact is this having on the system presently?
No, crude oil sales is one of our low-hanging fruits. Especially now that we are talking about crude oil at almost getting close to $85 per barrel. It's a low-hanging fruit for us. All the oil-producing countries now, they are smiling. Their reserves are overflowing. They are making a lot of, their currencies are getting stronger. So it's something that we can leverage upon to solve a whole lot of these macroeconomic problems that we are facing. So that is why we should not spare any effort to ensure that we restore confidence in the oil and gas sector, so that the existing investors that are there, because unfortunately, many of the major investors have left because of insecurity, because of poor governance, and because of policy and regulatory challenges. Many of them have left, but we can still salvage the situation. So if we're able to move up, improve our oil production, the market is there. So it could be a game changer for us. And I think the government is doing a lot, to turn the situation around. We already had the Petroleum Industry Act, which is a major policy instrument to support, more investment in that sector. The government has stepped up the issue, tackling insecurity and all these illegal activities in the Niger Delta area, which is also a major step forward. But unfortunately, even as we speak, we are not able to meet our OPEC quota. So it could have a very, very significant positive impact if we're able to get it right, the crude oil. And from there, we can leverage on that to now develop other sectors, to develop our infrastructure, to diversify the economy. Because you need money to do all these things.
But
you need
Doctor,
foreign exchange to do these things.
Dr. Yusuf.
And the fastest way.
Dr. Yusuf, what if we shut the parallel markets to address speculations on the Naira?
No, it's not possible to shut it down. How are you going to enforce that? No, you can't shut it down. I mean, if you shut them down, they just go underground. The only way to make them irrelevant is for us to be able to make the foreign exchange available at an exchange rate that we can support. That is it. If you know that if you walk into any bank, you get the foreign exchange at a given exchange rate, it could be 80, it could be 800, it could be 750, whatever it is. Let us come to a fair level of equilibrium where the gap between the parallel market and the official window will be as narrow as 5%. All over the world, they have parallel markets, but the margin is always very, very minimal. And the global standard for margin, that the difference between the parallel and the official window is just about 5%. What we had under the previous dispensation in CBN was almost 60%. Right.
Thank you so much, Dr. Yusuf.
What is imagined at this time is about 10%.
Thank you so much, Doctor. We're out of time. I've been speaking with the Chief Executive Officer of the Center for the Promotion of Private Enterprises, Dr. Muda Yusuf. Thank you so much, sir, for always finding time to join us on the program. We sincerely appreciate it. Thank you so much.